S&P Global Ratings projects Hong Kong's Northern Metropolis project will cost $360 billion, forcing government entities to incur heavier debt. To expound more on this, we are joined by Kenny Sri of OHKF and Hannah Jong of CBRE Hong Kong. Kenny and Hannah, thanks for joining us. I'll start with you, Kenny. S&P projects costs nearly double official estimates. Where is this gap coming from?
I think the gaps come from three sources. First, the rising construction costs, and then the second one is the different scopes of the cost estimation, and the third one is a shift in the funding model. So let me talk about the different scope of the cost estimations, because the government's 225 billion Hong Kong dollar estimate just cover the site clearance, land formation, and basic infrastructure. So basically, it is the foundation for the Northern Metropolis. But the S&P 360 billion Hong Kong dollar projection include broader scope, including the full build of the science park, technology and innovation hub, university campus, railway lines, and housing. So in other words, the government's figure is a partial build for the population work, while the S&P is a more comprehensive forecast of the total investment required.
I see. Hannah, from your perspective, where do you think is this gap coming from?
I agree with the Kenny. I think what government figure is always at the floor, not a ceiling. So, but what market says everything included. What happened if we include everything, like government pay directly and then MTR spending on the rail and property, park companies, university campuses, costs, public housing delivery, overall infrastructure requirements. So I think it's not really a gap. It's how you look at which angle the government announcement versus to the market looking at it. The gap or the difference, I think we have to look at. This is very common for the transformational infrastructure at this scale. But the question is really the funding architect can absorb it, because the timing is always the issue. And government position thinking that the land value is there where market is not looking at the same angle, and that how you can compensate the funding gap and how you can issue more bond, or where do you get the different funding, not just rely on public requirement in terms of the funding resources.
I see. So, Hannah, moving on, GREs are taking on more debt to fund this. How much financial risk does that create for Hong Kong?
I think the financial risk may be inappropriate lens. I think Hong Kong government-related entity like Science Park, Housing Authority, Hospital Authority, even majority owned by MTR, I think historically been most they always run very conservatively in terms of their financing model. So technically no debt or very little leverage. Now they're moving on to the higher leverage, but it's still a question mark. When government say we will fund or we will provide the loan, maybe the interest maybe is not there, or it will be very low rate. So that is a little bit of a breathing space. But what Hong Kong should really transform going forward is not just relying on these government entities or government-related entity to raise money, where we can look for more private money to come in and invest together with the government. And in order to make that make sense, we really have to have a very strong financial analysis. Currently, a lot of projects are run by engineer-led basis. Government always want to check technicality of the feasibility on the technical side, but whether we have done enough analysis on the financial side and commercial side, so that able to bring more money, global money to Hong Kong to invest for the long term.
And can you briefly, how much financial risk that create, or does that create for Hong Kong?
I think Hannah just mentioned that it required the collaboration between the private sector and also the government. So I totally agree with that. And definitely the government will issue bonds to support it. But I think it is more important to know whether this additional debt taken on by the government to fund the infrastructure development like this Northern Metropolis is justified. So actually, I think the Northern Metropolis is the key infrastructure developed to Hong Kong in the next 10 to 20 years, and not just for the economic and also the industry development, but also for the different purpose. So if you take a look on the government's estimation, so it will generate 250 billion GDP annual once fully developed and create around 650,000 new jobs opportunity and accommodate 2.5 million Hong Kong people to live there. So actually, it can also raise the revenue. So if the innovation technology industry is well developed in the Northern Metropolis, so more technology companies will come to Hong Kong, they can generate higher profit tax income and create more jobs, hence rising the Hong Kong salary tax income and operating income. So it can provide the cost and also provide the interest for those bond the government issues for this Northern Metropolis.
So, Kenny, can the Northern Metropolis realistically close Hong Kong's gap with Shenzhen and Beijing on tech and innovation?
I think the real gap Hong Kong need to close is the innovation trend gap from the R&D through the pilot production to commercialization, instead of the scale of the industry output. So the relevant comparison is not actually about matching the Shenzhen or Beijing in scale, because Hong Kong's role is special. It is a super connector and a super value added that bridge the international standards, IP protection and global market with the manufacturing and application capacity. But I do think the Northern Metropolis can close its innovation trend gaps. So as we all know, the Northern Metropolis is designed precisely to fill that missing middle. Hong Kong, has the world-class university research. We have the 5 universities in the global top 100, 4 in the top 50, but we are weak in the 1 to 100. That means the transition from the lab discovery to marketable protections products. So the certain terribles and also with the hotel provide the sufficient space for prototype, pilot production, and also some small batch advanced manufacturing. So this can definitely help Hong Kong to fill this innovation trend gap.
Kenny and Hannah, great insights as always. Thank you very much for sharing your thoughts with us.
Thank you.
Again, those were Kenny Shui, Vice President of Our Hong Kong Foundation, or OHKF, and Hannah Zhong, Executive Director and Head of Valuation and Advisory Services at CBRE Hong Kong. For more news, visit hongkongbusiness.hk.